Welcome everyone and thank you for joining today's virtual conference. My name is Divya Som and I am your host for today. Dun Bradstreet India, in association with Writer Information, is glad to bring to you the virtual conference on BPaaS for the BFSI sector, taking financial services to greater, higher realms. IP-led business process as a service, that is BPaaS, solutions are now being deployed to help execute multiple end-to-end financial processes, manage high-value assets, improve TAT, and deliver impressive STP rates and substantial cost reductions. Overall, this not only benefits BNFS companies but also their customers through a better range of products and services, efficient deliveries, and multi-channel capabilities. Well, today's webinar will dwell on the digital transformation within the BFSI sector and the advantages of deploying BPaaS solutions. Before we begin, I request everyone to please take a moment and go through the guidelines that have been displayed on your screens right now. We encourage you to ask more questions in the session. We request you to please type your queries in the questions section. These will be taken up in the Q&A session after the panel discussion. You can use the chat section for sharing your views. A couple of tips here, we want to know you better. Hence, we request you to please mention your name and company name when you post your question. You can also mention the person you are directing your question to. As you can now see on your screens, there is a Q&A box that will help you converse better with the speakers and moderator. Please feel free to use the same. Now, let's take a quick look at the flow of today's session. Please refer to the agenda displayed on your screens right now. Well, it looks like a promising agenda with an eminent lineup of speakers. I would like to take this opportunity to welcome and thank everyone for being part of this virtual session today. Let's kickstart our session with the opening speaker of the day. To deliver the keynote address, I would like to welcome Mr. Ajit Karunakaran, Senior Vice President, Strategic Accounts Group, Business Development, Writer Information, to kindly share his views. Welcome, sir.
Yeah, warm welcome to all the panelists and for all the attendees. My sincere thanks for investing your time with us today. Business process as a service is a relevant topic for the BFSI sector. And that's because I think in the last year or so, you've seen most of the markets where we are operating, economies kind of contracting, margins thinning, and there's been immense pressure on BFSI managers to deliver in terms of process transformation, cost optimization, and business process re-engineering per se. And that is where I think this process as a service has gained relevance, and more because in these VUCA time, there's a lot of pressure on all the process owners to ensure flexibility, scalability, at the same time deliver profitable growth. And if you look at the voice of customer, the need for seamless digital experience is something that is emerging in almost every market. And at the same time, there's a huge latent demand for credit as well as insurance as we come out of lockdown. So opportunities are immense. And over the last few quarters, we've been implementing a lot of BPaaS instances across markets. And that is where we felt that there is a great story to be brought to the BFSI industry. It's a wonderful opportunity for you to adopt BPAS, and we are there ready as a partner to help you in that journey. And we have wonderful panelists, people who have led from the forefront when it comes to change management, business process re-engineering, to help us take us through this discussion today. And I hope you really enjoy it. Before we get into the discussion, I thought of giving you a short insight into who we are, BPAS credentials, and to kind of define BPAS for you. So that will kind of set the context for the panel discussion that we are looking forward to. Let me just see if I can get my presentation up and running. I hope you can see my presentation now. And Divya, hope the presentation is clear?
Yes.
Okay,
Yes,
great.
yes.
Great. Okay, so in the next few minutes, let me give you like I said, a quick insight into who we are and our BPS credentials. We are today possibly we are in a very unique position to bring BPAS to you, given the fact that we are possibly the only data lifecycle management company in the world today, where our services span from BPO services to cloud data center, digital solutions, to a good old physical record storage. So that kind of gives us a good 30,000 feet view of how data gets consumed within a BFSI organization. And so today we go from records to information to insights in terms of services that we bring to BFSI. And we have more than 3,000 customers between Africa, Middle East, and Indian subcontinent. And this has also enabled us to deliver some of the best mission critical projects that have come up over the last couple of years. I've not taken the brand names for obvious reason, but hopefully the color and the description should give you an idea whom I'm talking about. But today we enable the largest biometric database in the world, right? India's largest bank, insurance and NBFCs, and including the payment gateway for one of the largest and what do we do here? We have really brought in the change management that I was talking about. We have really enabled their SLAs, delivered better ROI, and in these tough times, they have seen benefits being delivered to them, and they have seen value of the work that we have brought to them, and all this comes with solid quality and governance standards. We are, should I say, benchmarked by the best. We are audited by the best. That should say it all. And if I kind of sum up our BPAS credential, the fact that we have a complete view of data life cycle of our customers is possibly our biggest value add when it comes to our credentials. And the fact that we are a CMMI 5 company and that I don't have any dependencies on any third party as far as IPs are concerned. I'm into cloud computing, cloud hosted analytics, and the best part is that we have a very efficient BPS operational model, to deliver, and that is seen in the kind of implementations that we have had. Having said this, let me kind of define what is BPAS in a nutshell. BPAS is a form of business process outsourcing, cloud enabled. And in a nutshell, what it does is that it transforms the traditional BPO from FTE-based application infrastructure driven by the BFSI organization to a structure where it is outcome-based, transaction-based, pay-per-use. The BFSI organization focuses more on results that comes out of the application management and end-to-end process management and infrastructure that a service provider like us would deploy. And so a lot of ownership and responsibility shifts to the service providers. But yes, having said that, these are customized kind of framework that we have developed, which in a nutshell delivers agility and scalability. And these are the typical asks of your management today, right? In terms of scalability, efficiency, low cost, and the kind of I think between this year and next year, a lot of BFSI managers are going to be caught between lockdowns and opening ups, and so you need a model that can keep pace with the demands of the market, and at the same time, it's a very simple transitionary model which enables a current structure to seamlessly pass on. And what we have done is to make a plug and play ready, so to say, framework in place. What we need to customize here is to understand the rules, rule engines, and the kind of processes that the organizations follow, and then to look at the kind of BPR and change management that we need to implement. So we have a framework in place, and that is one one area why today we would want to present to you Writer's digital capability platform. And if you really look at it, this kind of answers your retail customers' seamless digital experience ask, right from digital sourcing to digital capturing of data to the financial analytics to the disbursement and exception management. So um, uh, I would want to leave this image in your mind as I hand it over to Vivek and to the panelists to take forward this discussion. Vivek, all yours.
Thank you.
Thank you, Mr. Karnakaran, for those insights. Not sure. I think I'm echoing. May I request our panelists to go on mute? Thank you so much. Well, thank you, Mr. Karnakaran, for those insights that I'm sure are beneficial to all our attendees today. Well, everybody's waiting for the panel discussion with bated breath. But before that, we just want to give everybody an opportunity to make this an interactive forum. And we'd like to run a poll here so that we could understand what our attendees are looking for, and it would help us serve them better. So yes, it's polling time, and I request everybody to please cast in your polls, including our attendees, our speaker panelists, everybody in the room. Most welcome to cast the poll. As you can see, the poll has appeared on the right side of your screen, and if you scroll down, you would see 8 different questions. So we request that we receive your inputs for each and every question. To all those present here on this webinar today, if you could just take a couple of minutes and do this poll for us right away. Once again, mentioning for all those who have just probably looked at their screens, there is a poll that is running on the right side of your screen. There are 8 questions to which we'd appreciate your responses to. Request if you could just scroll down, and it would be great if you could respond to all 8 questions, because it really helps us serve you better and take this service to the next level, if I may say so. Well, as we go along, everybody in the room can continue polling and voting. Your opinion is indeed invaluable, and we look forward to your responses on the poll. Meanwhile, yes, moving on to the most exciting and awaited knowledge sharing and interactive session, which is the panel discussion, of course. The discussion today is around the topic BPAS for the BFSI sector, taking financial services to higher realms. And we have some very interesting names here. This session will be moderated by Mr. Vivek Mathur, Director Consulting, Deloitte India LLP. Welcome, sir. Our first panelist is Mr. Kazad Hiramanik. He's the Chief Operations and Customer Experience, Bajaj Allianz Life Insurance Company Limited. Thank you, Mr. Hiramanik, for joining us today. Following him is Mr. Shankar Shastri, Head Retail and Rural Business, Adani Capital Private Limited. Thank you, Mr. Shastri, for joining us today.
Thank you, Divya.
Pleasure, sir. We also have on our panel Mr. Rajendra Tathare, Head Credit Underwriting, Fullerton India Credit Company Limited. Thank you, Mr. Tathare, for joining us today.
Thank you, Divya.
We also have welcome. We have with us as our final panelist, Mr. Satish Pandita, Business Head, BPO Services, Non-Voice, Writer Information. Thank you, Mr. Pandita, for joining the panel. Let us begin the Hi, sir. Let's begin the panel discussion. Over to you, Mr. Vivek Mathur. And may I request all our panelists to please come on camera. Sir, over to you, please.
Hi. Good afternoon, Divya. Can you hear me well? This is Vivek.
Yes,
Hi.
yes.
Thank you. Thank you for confirming that. First of all, thank you for all the introductions and the initial talk that Ajit made. I think it set the ground for all of us. So as all of us are working in this sector, right, BFSI has traditionally been one of the early adopters of all the new technologies, driving innovation. last few years, the entire focus has been largely on digitizing each step of a customer journey to basically offer differentiated customer experiences. But at the back of it, there is a lot of simplification that needs to happen to streamline. Sorry, there is a lot of background noise. Yeah,
Requesting
sorry.
the other panelists to go on mute, please.
Thank you. Thank you very much. Right. But at the back of the entire digitization story is a lot of changes that need to be done at the back end, whether it's in the front office, middle office, back office functions, streamlining all those operations with an ultimate goal to offer personalized, localized products and services, and also digitize the entire operating model for any of the firms in order to deliver these services. So I think there's a lot which has got changed, and I think from a mindset perspective as well as the way I would say the change has happened, and COVID has kind of accelerated some of it. I would like to call upon the panelists to start with Mr. Shankar. I know you, sir, you work in closely, specifically in the SME as well as MSME and agri segment. Seen around specifically around originations, right? Is there a change that you see how the customers of tomorrow are being, or the prospects that we see in these markets? How have you started approaching them differently than what you were probably doing earlier? Let me just call upon you, and then we can initiate the discussion.
Yeah, thank you. Thank you, DNB and Writer, for organizing this discussion. It's very relevant in current context. Thank you, Vivek, for setting the context. Now, coming to the onboarding or origination, actually, frankly speaking, the origination or the digital onboarding was a work in process for some time. You see, especially across banks, NBFCs, lending, or even liability sites, or even investment sites. People had started it about 4 or 5 years back. People have started this process, and this was going on. What last 4 months or about 130 days of this situation, unprecedented situation, has done is basically accelerated it. And people have realized that you cannot live without this. There used to be, constraint in our mind what we need to do, which we can do it digitally. We are not able to do because of thinking that there are certain risks associated with it, or the way we need to do things may not be feasible as of now. A customer is not fully educated, but especially coming to the retail asset side or retail lending side, urban customer, a customer who are educated enough, can be originated digitally if it is particularly unsecured loan. There are no security involved. That was happening, especially in urban side. Secured side, the origination was happening in some places, but not fully. The end-to-end customer onboarding till disbursement was not happening because there is a leg of security creation which is still not fully digital. There are enabling regulations required and certain amount of information required, which is still in work in process. So this is what COVID kind of a situation, unprecedented situation, can change the mindset of all stakeholders. But then the larger question is, in a country like India, with a 130 crores plus population, and majority living, in a rural space or space where people, those smartphones have penetrated, data has become cheap, and people are able to access, say, for example, Facebook or a WhatsApp, but not necessarily they are doing the financial transaction. It may be, in some percentage, it's very difficult to guess what percentage of population is currently very comfortable in, say, opening a bank account digitally. Say, if I take a name, Kathani in Karnataka, a small location, when we acquire a customer there, hardly customer is going to give us a digital bank statement there. He has to visit a bank, get his passbook updated, and come back. In current situation also, I'm talking about recent 10 days. And our process gets stuck because of that. 7 days, 10 days, it will get stuck because of the current situation. Banks are not operating fully. So it is good to see the progress in last few months, 4 months, 3 months. But then to see across India, across a majority of population coming to this kind of a origination method, it will take some time, lot of effort from our side, especially the lenders or the banks and NBFCs, educating customer, making those processes more simpler, maybe the WhatsApp kind of a medium where people have started trying to onboard customers through this kind of a chatbot. Possibly that is the way forward to make more people come to this kind of a platform. Otherwise, what will happen is that as this situation eases, you will see we'll go back to the previous thing. We are comfortable physically going, meeting customer and getting all kinds of papers, and that will continue. In my view, we are still long way off. It is to cover entire or at least majority of Indian population. Thank you.
Sure. Thank you for that, Shankar. But I think ending your points, right? You mentioned while there is interest, there is enthusiasm, there is a reality in front of us. But are there any specific areas, or even for that matter, any specific technology interventions that can help? It may not eradicate, but it may help in terms of, let's say, minimizing some of the customer steps that the customer need to take today, or whether it's at the back office steps that we do, today in terms of at least onboarding customers. And I'll take one example here. For example, if we are talking about agri customers, and India is a multilingual country, right? Do you see any work being done so far in terms of, maybe even onboarding customers using speech to text kind of capabilities and things like that?
Yes, I think technology side, most of the technology is available as of now. If you look at the customer ease point of view, multilingual chatbot, multilingual speech to text, a matter of educating that customer to reach to him and explain him. For example, a customer can be onboarded. Some time and effort from our side. Am I
Yeah, you are right. Yeah, I can hear you, Shankar. Sorry, can you hear me?
Yeah, yeah. I lost you for a moment.
Sure, no worries. No, so I hear you.
Reaching and making him understand this is workable.
Sure, Shankar, can you hear me?
Yes. Yeah, I'm able to hear.
Okay. No, so thank you for that. I think let's continue to move on. So let me bring Mr. Rajendra you on the table, sir. I think what Mr. Shankar shared about the advancements, the technology availability, and some of bit of experiment on the origination side. You have worked a lot around the underwriting as a space, right? And it ties up very nicely with, in terms of if we have to go into especially these newer segments or more complex segment, let me put it that way, whether it's MSME lending or even agri lending. What's been your experience, and what is it that you have seen differently happening, especially during the COVID times?
Yeah. Thanks, Vivek, for the question, and thanks, writers team for conducting this. I just really wish first that the entire writers team and all those who are participating here, all of you need to understand that this is a tough time. Okay, and I really pray that none of you or your family members get the COVID test positive. In fact, we should embrace the positive things that COVID has brought on the surface of the earth today, which has given push to the digital initiatives. Okay, if you ask about the customer's life cycle in the BFSI domain, yeah, it has changed completely overnight. And so for all the lending institutions across the world, none of the segment, none of the industry is there which is not impacted. So if I divide this segment into, let's say, two parts, salaried customer particularly, and the other is MSME segment, micro, small, and medium enterprises. And we can then further dice this into urban and rural geographies, and then government, non-government for salary. And the other segment is self-employed, which is MSME, as we discussed. So the cash flows have been impacted for this entire, all the segments. Okay, the customers are now holding on to their liquidity as there is no clarity of future. Even if you check the bureau data, the inquiries for gold loan is showing a spike. Now there is a reason for it because people are preferring to keep cash with them, and the other indicator is about the EPFO withdrawals also has gone up. Okay, so moratorium percentage also proves that not only those who are having cash crunch are availing this, but even there is a segment which is not having that cash crunch also are going in for moratorium, okay, in order to maintain the liquidity, to take care of the family exigency, if any. If I talk about the industries, the MSME sector, now there are sectors which have been highly impacted, but some sectors have picked up really well during this COVID, and like, online education platforms, the telecom companies, broadband, which is a must now for everyone, the internet suppliers, pharma industry, and so on. Okay. So if I talk about the impacted segments, then the real estate industry, hotel industry, tourism, transportation are worst impacted because customer is currently, they're fighting for survival, and there is buying a house or traveling for luxury is the last priority of the customer. Therefore, the home loan sector will take some longer time to recover. Uh, Coming back to the individual customer, if I divide this in three parts for the BFSI domain for, let's say, sourcing, underwriting, and the post onboarding scenario, that is the EMI collection and maintaining the account. The sourcing strategy should be very clear as to which industry to focus, which segment is highly impacted, which is moderately impacted. And then we need to see the segment and the sub-segment, because no two customers are same now. Okay, even if they are working in same industry, or for that sake, even in the same organization. And in credit underwriting, the model needs to be now based on artificial intelligence. So Vivek, to your question, the alternate data, the artificial intelligence and machine learning, the chatbots, as Shankar mentioned, device identification platforms, and customers' behavior patterns are very useful. Okay, so gone are the days of traditional underwriting where we used to collect physical documents, eyeballing these documents, visiting customer place. And just 2 months back, had somebody asked me to visit virtually to the customer's office or business place in order to sanction a loan, I would have said no. But today we are carrying out WhatsApp video calls. We are recording the latitude and longitude of the location, and we are getting the location details of the customer. And this is the need of time, because if I'm not doing this, I'll be certainly out of the industry. The customers' behavior patterns that we were using 6 to 12 months old is now not useful. The utilization of the data or alternate data, as I say, the social website data, the behavioral score is very important. I remember one fintech which was using the questionnaire, online questionnaire on their app to sanction a loan. They used to ask questions like, if you do not get salary, how many months you will survive? And these are all, psychological questions where they try to understand the behavior of the customer. So somebody types in 2 months, then erases it, writes 3 months, then erases it, then writes 9 months. Okay, so this data is getting captured. Whatever you are erasing is also getting captured, and you will surely be scored or rated low on that, and you will get a lower loan amount, because the 2 months is also captured by system, 3 months is also captured in system, and even the 9 months, which is your final answer, is also captured. That shows that you are not sure of this. It also asks you about the qualification. So there is no cross-checking of this, but it captures the confirmation that you are giving on the system. In the background, it captures your phone model, okay, because you are running that app. So it captures the model that you are using. If you are using an iPhone, obviously you will be getting good score. What is the screen size? The smaller the screen size, lesser the score that you have. Which are the apps in the phone? For example, if you have various news apps, NDTV, ET, or maybe you are having a lot of bank apps that you are using, you will be scored high compared to some other cheap apps that if you are using. Now, for example, the live example that we know, you book the cab day to day. Even if you are two people who are traveling from one location, common location, to the destination same, and if they're trying to book a cab, one person will get higher rate and the other will get lower rate most of the times, because the app, it also captures the historical data that you have. It has your entire behavioral pattern with them. It also captures your battery percentage. So you can understand, lower the battery percentage, they know that you are going to take a cab, and it will show you the spike in the fare. So that's the strength of the data, so utilizing this high frequency data is the order of the day. This alternate data is going to help not only in urban, but also in rural population, which is, typically new to credit population, I will say, because they do not have exposure to banks or loans. And it is said that this new approach of alternate data will provide access to a market of over 300 million unbanked households. Look at the huge business opportunity that we'll have. Therefore, the underwriting also needs to shift from person-driven to machine-driven process, and the model also needs to be built around this. Okay, the third stage is on the post-booking, that is the EMI collection. So a lot of customers we have experienced in last 2 months that even the rural customers, there is a great improvement in collection of EMIs digitally. Earlier we were not thinking on these lines, but now there's a need of time where we are asking customer to transfer the payment to us through net banking or through various payment gateways, and the number is going by leaps and bounds every month. So this is the magic that COVID has brought in. Now you can imagine the cost save that we'll have if you are collecting this amount digitally, lesser number of frauds, no cash handling. So that's the overall customer life cycle is all about. That is how it has changed. I think that's the new normal that we need to embrace. Yeah, Vivek.
Sure. Thank you. Thank you for those insights. Specifically, you mentioned about both the urban as well as the rural customers.
Yeah.
What enrichment from your perspective has happened in terms of underwriting and the sources of data specifically for the non-urban segments?
Yeah, so in rural segment, I think these things are, a lot of things are in WIP, and we will soon have the app development. Various organizations are working on that, and we'll have the onboarding as well as the alternate data usage that will go up substantially. Okay, as I mentioned, the behavioral pattern of the customer and the data that is lying on the mobile that will be used. There are various apps which read this entire text messages, which reads the call logs. And had you imagined that Truecaller will ever launch loans? Okay, you would have got the message just last week that Truecaller is also launching the loans now. So that's the strength, that's the strength, and that is how it is going to help us in future.
That's tremendous, powerful, as well as, I guess, at times borderline scary from a consumer perspective.
Yeah.
But let me bring in Kezad here and see from an insurance perspective, Kezad, what are you seeing, from especially in terms of policies? How is it that, the world of policies and insurance is changing in these times?
Yeah, so, thank for the I who's people hard product today, we are seeing that customers themselves find like because this democrat and strike if isolation will strike you at any this is an inflection point for the insurance industry, at least in terms of the last year actualize and virtualize, where we took it upon ourselves to know our customers. We took it upon ourselves to stop spamming customers and make very, very contextual communication and understand customer need, and finally virtualize the entire process, because largely in an insurance application process, there are three sticking points. The first, of course, was the paper documentation that other people talked about, so whether it was KYC or whether it was financial documents. That was A. The second was, of course, customer consent and customer signatures, wet signatures on forms, etc. And C was the payment. So typically, till about last year, we were still a cash-driven company. which we have completely eliminated, and we now find that all three of these legs, if you see the application form filling and the financial documents, we've actually we have a very rich API ecosystem where we've completely analyzed the sales cycle, whether it's a financial institution where we integrate with their servers direct, fetch customer information, or even agents for that matter. So agents today are all equipped with a mobile application on their phones or on their tablets, basis which they can either collect scanned copies of customer documents, or if they can collect identifier like the CKYC or Aadhaar, which is upcoming in the next month or so. The details of the customer are directly populated. In addition, we've also integrated with the entire credit bureau ecosystem, thereby being able to fetch customer, rich customer financial information in terms of their payment morale, in terms of their credit scores. So that upfronts the entire process where I don't need to collect ITRs, I don't need to collect salary slips, etc. Then, of course, customer consent is very easily done through OTPs. Similarly, payment. So payment, I mean, in this country is at the cutting edge in terms of payment ecosystems. So we've enabled, the entire ecosystem, right from net banking to cards to the UPI ecosystem, wallets, etc. And with the mandate ecosystem being completely, digitized, it becomes very easy to become a completely touch-free, paper-free, and presence-free process. Because what we are finding today actually is that customers don't want to meet a strange agent or walk into a bank branch to be sold, but they are completely okay doing, buying over a Zoom call, providing documents over a Zoom call, or through WhatsApp, basis which the entire process becomes digitized. In addition, what we've done very, very effectively to further virtualize the entire underwriting process is that, especially for customers that we know, profiles that we believe are safe profiles, we have a very, very good analytics model that scores profiles upfront before the case is thrown in front of an underwriter. So today, what my specialized underwriters are doing is only looking at high risk or very high risk cases, basis which they are doing underwriting. The rest, the system is actually underwriting and issuing practically in real time. So, my opinion, what customers today are looking for is a completely paperless, completely frictionless, and completely presence-less process. And to that extent, thanks to the fact that we've been in this journey for the last 3 years, COVID and the effects of COVID didn't really impact us to that extent, barring those customers that, for example, had to go for medical tests because diagnostic centers were shut. But even there, thanks to our work with the reinsurers, we were actually able to convert those customers to medicals. So where the customer could actually do the entire medical in conjunction with a trained medical professional over phone or over video. So even the need for the customer to step out of the house was mitigated to a very large extent. And this is, shown in the fact that in the first quarter, when most insurance companies have degrown, we have actually grown about 30-40% in terms of number of policies sold. So that should tell you that despite the fact that the customer was locked up at home, the distributor was not able to go out, the institutional partner wasn't really able to sell because customers weren't walking into his premises, we were still able to grow because of the fact that we had good quality customer profiling, we had the API ecosystem, we had the payment ecosystem, and more importantly, we were able to take decisions on the fly. And one of the points that Shankar made, very true. Even for example, people are talking about moratorium, and people are talking about delinquency and lack of liquidity. Our collections this year are renewal collections. So this should also tell you that the customer realizes that today I need to prioritize my insurance policy above other investments or other things that I need to spend on, because today my family and my future is at risk. So our collections have grown about 20% plus, and 60% of those have come online. So that should tell you that when push to shove and there is no physical infrastructure for you to go and check or or a bank branch to work with, the customer very easily switches mediums, and as long as the medium reduces the effort and the cognitive load on the customer, he's very happy to use it. And like I said, India is at the cutting edge of the payment ecosystems. And most customers today, whether you like it or not, even a rural guy, for example, is using UPI. So he's using the BHIM app, he's using Google Pay, he's using Paytm, etc. So all you need to do is be there when the customer actually needs you. And that's precisely what we've done. And, like I said, COVID hasn't really impacted us to that extent because we've grown and we continue to grow thanks to our digital ecosystem.
Well, thanks, Kezad. I think you put it very nicely there, right? We have to be where the customers are, right? And that's the core of everything, right? Being digital doesn't mean that we offer services where the customer wants to be physical and vice versa. But from a voice of customer perspective, what's been your experience? Are there any, new asks that the customers have kept bringing? While all of these innovations and going to where, especially for example, the payment collections that you mentioned is basis the initiative that you have taken and would have got some returns basis in terms of faster collections, reduced time for that, and the downstream effects of not doing physical connections and so on and so forth. But what is the customer asking us? Are there any asks that you desire and always think about and you want to make it happen from the voice of customer?
See, one has to realize that today's customer, because of the fact that he is, we are still in the middle of intermittent lockdowns and a large amount of uncertainty in terms of what the future holds. Today's customer has become a little bit more impatient in terms of answers and real-time redemptions. So the faster we are able to, transparently tell the customer, for example, where his application is stuck, what he needs to do next, what can he give us a surrogate, for example. So if I don't have ITRs, what can I do other than that? Can I provide my mutual fund cash statements, or can I provide a fixed deposit receipt or whatever? If you are able to transparently communicate with the customer in his language. So one very other important thing is that because we are largely intermediated, the intermediary controls a large amount of the communication. So how do we educate the intermediary to ease the pain of the customer journey, through reduced physical effort, time effort, and cognitive effort is very important. And to that extent, customers have already hopped mediums. So that challenge doesn't exist in terms of, my branch is not open or, the bank is not open to collect cash. But the point is that communicating with the customer in the language of his choice with the intermediary to ease the process and at the same time simplifying the process and the product to the extent where the customer can get it first time right and the intermediary can get it first time right is very, very critical at this point in time. And let me tell you that the kind of escalations and the kind of complaints that we are getting today are very, very different from the kind of complaints we were getting pre-COVID. Okay, so today customers are actually complaining that my policy has not been issued. This was never the case earlier because the customer kind of understood that it will take some time. He treats insurance as a slow-moving category. Not so anymore. The customer today has already switched mediums on payments. The customer today wants to buy himself online. He doesn't want an intermediary in many cases. We're seeing a lot of movement on our website through, policy aggregators. So the customer wants to compare. The customer is far more informed in terms of taking decisions basis the company's solvency ratio, reputation, claim settlement, etc. So there is a lot more research happening. The customer is a lot more impatient, and the customer wants a lot more transparency from his service providers.
Sure. No, this is very interesting, right? Especially the point that you mentioned on intermediaries, right? How do you control an overall life cycle where you yourself are taking control of a part of the life cycle, right? And you're not directly in touch with the customer, and customer is now asking for a lot and directly from you because they see you as the brand, right? At the end of the day, right? Let me also bring in Shankar. Shankar, what's your perspective on voice of customer? Do you see that as a big thing for you, and how are you addressing some of the asks that the customers have been asking you as an organization and the overall industry with?
Yeah, it is very heartening to hear Kaizad talking about insurance and what kind of change in customer behavior it has happened over the last 2-3 months in terms of premium collection, in terms of renewal, in terms of avoiding distribution. I think coming to the our or my domain, retail assets, retail lending, exactly opposite has happened with the lockdown, with moratorium, with livelihood getting impacted. We actually primarily deal with MSMEs or farm segment, the farmers or commercial vehicle, which are again micro entrepreneurs. Entire their life was shut for about 3 months. I think currently also I would say they are up by about 60-70% of what normal was there. So the expectation, if you ask me what that kind of customer expected at that point in time from us, actually nothing. They were expecting that do not call us, do not tell us anything, do not ask us EMI because anyways moratorium has been announced. Now also the expectation is same that very difficult to repay. See, if you have to understand that kind of a customer whose repayment, whose livelihood has been impacted heavily, I think most of us in this discussion are not in his shoes. A person who is driving a small commercial vehicle, not running the vehicle for say, about 3 months, and his day-to-day earning was impacted. No, he doesn't have significant savings. He doesn't have significant money to fall back. So if you ask us what kind of expectation the customer had that point in time, actually he had nothing from us at that point in time. We were just expecting these problems to get over and this lockdown to get over. Actually, we are also expecting that only that as soon as we get back on our feet, we can go back and start collecting because our revenues have become zero. New revenues zero, and we may be staring at a pretty high level of delinquencies, which we don't know exactly. Very difficult to quantify as of now. Maybe most of the lenders are in the same boat, and the customers are those lenders are also in same boat. There is nothing to blame anyone because that's the way the situation has unfolded for us. Now, coming to what customer now expects from us, well, obviously he expects a lot of support as of now. Whether to restart the business in terms of giving additional support in terms of financial support to restart the business or get some more working capital more seamlessly. What has happened is because of last 3 months, 4 months of lockdown, we have also become more digitally aware or digitally enabled. So we were able to service him little faster and easily. Though I can't say we have become very seamless organization that we are able to do it in 24 hours, but still we have become better. But then that thing has to become more and more better because the customer expects now this kind of customers that these kind of services are seamlessly given, especially getting a loan when he wants it. If it is needed in next 1 week, if it money comes to him within that period, then it is useful. So that's what one of the voice of the customer I can say. The second, in terms of services, for example, he can't visit branch frequently. Earlier he used to do if he wants statement of account or something. So now that has been enabled by some digital channel. You can get it over WhatsApp or it can get it over an app. That has made life simpler for customer and some customers have adapted to that. So that kind of a change has happened. But overall, this pandemic has obviously impacted every one of us heavily, and the customers, especially the small and medium businesses, are impacted heavily for their shutdown of livelihood for about 3 months. It takes time for them to revive, and I think there are enough efforts being done by many stakeholders to revive them back. I think that is the primary expectation a customer will have as of now. Come back to normalcy.
Right. You put it very well, Shankar, in terms of how the reality is, right, for many of the customers, and especially whether it's a daily wage workers or people who have not the standard professional services and organizations behind them in terms of salaried employees, right, which is a large part of our country, and they require very different kind of outlook today and sensitivity in terms of understanding their problems, payment issues, right, and so on and so forth. Right. But let me bring it, Rajendra, here back and see, is there any, do you see any silver bullet for the kind of trends that we are discussed today? Is there something that we can absorb and maybe go back together and work towards those, whether it's the voice of customer that, we heard today? What's your, where should the BFSI sector go from here?
Yeah, thanks, Vivek. I think, the topics that Kaizad and Shankar touched upon, the WhatsApp process that we discussed is currently in place for many fintechs, including Fullerton India. Also, we have that. We have the WhatsApp documents that we take from the customer, and we have the e-agreement. And so there is, a non-touch process. Now this pandemic has, pushed us to think that why this process cannot be replicated for rural customers. It was only in the mind that we cannot do this for rural customers. But as I said, that the scenario is now that we can do this similar process for even the rural customer, which will, today also the customer is also insisting that he doesn't want people to visit his place because there is a risk if number of people visiting to his office or to his residence. And so he also wants the straight through process, which is a non-touch process that we are looking at. If I talk about the Indian scenario, I think the journey for India in terms of digitization is also, in exciting phase, as quoted by Nandan Nilekani in the last meeting, that the India Incorporation is doing, appreciating all the changes that we are calling out, the technology changes that we have, and the fintechs that are coming up. I think the path is really good, for India as an enterprise, and will soon all this will lead to better service to the customer, faster service to the customer, and the turnaround time will be very less. I think that's the positive thing that we should carry from this pandemic.
Right. No, makes sense. And let me also bring in Kezad. Kezad, any additional closing thoughts in terms of is there a silver bullet?
Yeah, so Vivek, there is no silver bullet because it's different strokes for different folks. But if you were to ask me, the fact of the matter is that even though we are growing, the ticket sizes in our industry have gone down. Persistency levels across insurers have gone down. Even though our collections has gone up, our persistencies are marginally affected by 3-4%. So that being said, I think variabilization of the organization's cost structures, okay, cash conservation and variabilization, and focus on reserves and on profits is going to be very, very under strain. And that being said, I think investment in our past investments in digital are definitely helping us decongest a lot of the processes and remove a lot of age-old mindsets that existed. So, for example, if I wanted to meet a customer, I had to travel locally. So the cost of local travel. If I wanted to do a conference, I had to do it in a 5-star hotel. So that kind of cost. So a lot of those kind of costs today will be very, very rationalized in the new normal, and which is great news because eventually it's all very, very temporary. But you can do everything like we are doing this entire virtual webinar online with 160 people. Imagine if we had done this in a 5-star hotel, how much it would have costed. So variabilization of costs, digitization of journeys, a decongestion of processes, making them intuitive to reduce customer and distributor effort, integration of the API ecosystem with public databases, creating a digital payment ecosystem, communicating online, and therefore ensuring that your customer data is pristine. Okay, so one of the things that we do very effectively is use public databases to ensure that our customer contacts, and see, this is typically a pandemic problem of insurance companies because these are long-term contracts, and because they are low touch in nature, you tend to lose touch with your customer. So how do you keep ensuring that you communicate contextually to enrich your data, use public databases to update your record so that the customer is not lost sight of, and at the same time encouraging customers to continuously engage with us and buy more from us. See, it is always easier to underwrite a customer than a customer you don't know. Okay, because eventually your past experiences tell you whether the guy has the right mortality, morbidity, financial credibility, as compared to somebody you don't know, and then you have to rely on the agent, you have to rely on a public database, etc. So largely knowing your customer, engaging with your customer, deepening product intensity, and providing touch-free, effortless processes, paperless processes is the way to go. And in my opinion, that will reduce the amount of costs of management and overall variabilization of costs. So choosing a good partner. So because I'm an operations head, I can also say this, that choosing a good partner, in terms of outsourcing your processes is so important, because just as we were caught unawares to that extent when COVID happened, and suddenly offices shut down and agents were shut in the houses, and and our own customer service executives were in the house. Even our partners were caught unawares. So how did they quickly virtualize? So my call center, for example, today is practically running from home. So all my agents are taking calls at home. My chat line is completely at home, but it is supported by WhatsApp and in an AI-powered bot. Similarly, my entire email channel is sitting at home and answering emails. So similarly, even my my data entry, my back office scrutiny, etc., everything is happening from home. I mean, everybody's not in office, and people are not going to come to offices for a long time, if you ask me. Considering the fear psychosis of people are family people, they don't want to come into contact with other people. So that being said, the flexibility and variabilization of cost in conjunction with technology is going to be the mantra for the future if organizations have to survive, revive, and thrive in the new normal.
Right, Keza. Then you, I think, brought in also one more interesting perspective. What is the ecosystem from a service provider perspective that one needs to worry about, right? While you can take care of your own house, your own agents, right, your own ecosystem employees, maybe even distributors, but then you have so many different players that might be working with you. So let me bring in here Satish, and Satish, if you can quickly cover the aspect of how the readiness of different service provider ecosystem is.
Yeah. Thanks, Vivek. Thanks for the question. I will take it from where Kazad left. I think it's important for any organization to look for a service provider who can help them in the whole changing business dynamics. So, as is a responsibility of service provider to ensure that they support the organizations in terms of adapting to the changes and at the same time be more efficient. So we as service provider for a lot of customers in the BFSI have kind of taken this taken this initiative of launching BPAS as a game changer model to help serve customers to make them more efficient in terms of managing the end-to-end life cycle of right from onboarding to sanction, disbursement, and issuance. Having said that, the intent of this whole model is to create a win-win situation wherein the customers can look at us as a one-stop shop for managing their end-to-end life cycle, right from onboarding to disbursement. At the same time, we can add value in terms of bringing in tech-enabled processes. So when we say that we are doing onboarding right from online channels, you see insurance has moved big time on digital onboarding. So it's very pertinent to see that a service provider ecosystem should be well equipped to manage such kind of inflow. Like for example, I give a good example of a life insurance company wherein a lot of customers have started onboarding on digital channels. So what happens is that the flurry of cases that come for an underwriting process gets piled up because they are not ready to manage such volumes. So if you have an ecosystem which can assist those insurance companies to create a platform and make their life simpler by technology adoption and making their case summarization look more seamless, so that will help them in issuing policies faster, and at the same time making them more competitive. So this means more business for insurance companies wherein voluminous cases that come into their bucket are issued faster and they get realization of money. Similarly, for lending, you see that the onboarding trend has changed with the pandemic scenario. So it's important for the service provider like writers to pitch in at the right time to support the customer needs in terms of bringing in the entire digital journey, right from capture, analysis, verification, authentication, sanction, and disbursement. Everything digital, seamless, more tech-driven, and more appropriate in the changing scenario.
Sure. Thank you, Satish, for that. I think we'll jump on a few Q&A sections and questions that have been posted by the participants. And let me take very quickly the first one. The first one is by Mr. Darshan Gandhi. More digital approach leads to higher risk due to lesser checks and controls. How do we suggest to handle that? And let me put it across to Shankar. Shankar, do you have a point of view on this? Does more digital means more risk?
I think that's the notion which is there, higher digital, higher risk. But I think technology is in place to address that across. I can quote an example. For example, physically you go and meet the customer to verify the address, whether he stays there, whether he works there. This can be done virtually also because everyone carries a mobile phone and you can simply track his location for last 30 days and find out whether he works there or he stays there. So there are enough checks and balances in digital lending where you can mitigate risk by going fully digital. It is not that it is higher risk. It is similar risk what you take in lending. In my view, we are not going to take higher risk if the entire end-to-end process is balanced well and with all the checks and mitigants in place. For example, the same risk exists if somebody impersonates someone and takes a loan. Digitally also that can happen. Physically also that happens, and digitally also that can happen with a customer wanting to defraud the lender. So I think it's a notion, perception, which I think exists till now. It will gradually go. It is not that going to overnight. It has improved over last 90 days for sure, but it has to go a long way still.
Right. And perceptions are harder to change, right? So
Yes.
it takes time to change them as well, right?
Yeah.
It's a behavior change, culture change, all of it together, right?
Yes.
Okay, moving on. There's another question on are the digital processes fully accepted by RBI? For example, not requiring physical documentation for onboarding, for disbursal of loan. Let me ask first Rajendra, and I'll also want to hear from Kezad, his view as well.
Yeah, so from the loan perspective, yes, it is driven by the RBI for BFSI segment for the banks and the NBFCs. So even if it is, let's say, sourcing, so there is no such condition, or maybe there is no such negative thing that RBI has laid down as a regulator that we cannot take the documents in the scanned image form or in some other form. It also allows you to use the alternate data, as I mentioned in my first speech. About the onboarding, there is a e-agreement process which is in place, and that also allows you to sign the agreement digitally. And if you're asking about the repayment instrument, there is a e-natch which is in place, although for limited set of banks, but it covers most of the segment today. So I think there is no such embargo from regulatory authority on onboarding or sourcing the cases digitally. It is very much allowed. Aadhaar is helping us a lot in your processing, as Kaizad mentioned, the presence-less process that customers are looking at, or the paperless process that the customers are looking at. I think these processes which are defined and the digital processing overall that India is leading to is really helping customers.
Okay. Let me
So
also
I will
bring
just step in where
Kezad, your
Rajendra
views.
left off and say that, we are not covered under RBI per se, we are covered under the IRDA. And in my opinion, I think the regulator has been extremely proactive in these last few months in terms of encouraging insurance companies to go digital and to, even provide simple services. So for example, a lot of policies actually matured in that quarter where the stock market fell by 30-40%. And the regulator proactively came up and actually asked insurance companies to offer customers a settlement option so that they didn't get their maturities, which typically got depleted because of the fall in the market, but to take it in monthly or quarterly installments online. So a customer could actually send you an email and say, I just want a settlement option, which would largely have been a paper process in a branch. Similarly, even loans. So insurance policies also qualify for, as collateral for, certain amount of funding. That too, the regulator was very keen that we provide customers bridge funding, which was a process that we implemented completely online. So to that extent, I think the regulator in our sector has been extremely customer friendly, extremely proactive. They actually also said that because postal services are not functioning, please send policyholders soft copies of their welcome kits or their policy documents. And as and when the postal service is normalized, please send them their hard copies. At the same time, the customer also has the option to dematerialize this policy through an insurance repository, which is a completely online process. So, the point is that the regulatory support has been extremely high, and the regulator has been extremely understanding in terms of the use of, public databases or surrogates. So another very good example, our regulator also has a subsidiary called the Insurance Information Bureau, which actually, collates information of all life insurance companies and gives, very, very strategic insights in terms of, which are high risk locations, which are high risk profiles, whether customers have fraudulent profiles, etc., which is actually helping insurers in terms of taking faster decisions, more pragmatic decisions in favor of customers. So there was no real stoppage even in terms of our claim settlement, despite the fact that things were shut down and claimants couldn't come to our branches, because we had an online process for submission of those claims. So all, in my opinion, I think the push that the regulator has actually provided us in terms of going digital has been very, very welcome and very, very encouraging.
In Keza, there's a related question that with all the digitization and automation that can happen in any organization, have any of you seen any decline in terms of reduction in terms of manpower? Can it lead to that, or is it like early days today to even comment on that?
See, this is a standard question typically which is asked because any digitization initiative is looked at as a job loss opportunity. But in our organization, interestingly, nobody has lost his job. In fact, we paid everybody on time on 30th April, their bonuses, increments, we promoted people, etc. So to that extent, we have used digitization as a force multiplier. So, even a simple thing like my branch operations. Now, see, typically if my branch operations is shut, my front office guy can't go to a physical location and service customers, right? Because, the shutter is down. But even there, because we had proactively empowered the branch operations guy with an app on his phone to, call out customers locally to collect policies which are lapsed, create sales leads, generate leads for loans. We actually found that we set some serious records in terms of the productivity of those guys sitting at home and using just a mobile app to see data, dispose of calls, and create leads and to collect money online. So they actually, they used a 3-step process, which was typically, inform, educate, and encourage, which the customer really appreciated because that was the time when the customer was alone, left to his own devices and needed local assistance. So in my opinion, this is not going to lead to any job losses. This is only going to further the need for people to reskill themselves and improve their productivity, which is going to take companies forward. So there's a positive way of looking at this entire trend.
Sure. And very quickly, Shankar, you have the same point of view. Any thoughts from, you have different kind of assets that you manage today. Does digitization lead to job losses or reduction in terms of manpower for an organization?
In terms of assets, retail assets, suppose everything happens digitally, whether manpower will go down. I don't see manpower going down. Especially last few months, that has not happened because anyways, we are under lockdown or shutdown. But if it happens suppose assume everything gets originated digitally and everything done seamlessly, whether it will go down, I don't think it will go down because it will increase the business opportunity immensely. So actually, employment opportunity will be more for people to come and work. As suppose one organization of same size goes digital fully, the amount of business or revenue which will come in or number of customers which will come in will be far more larger, and to manage them will require more manpower actually, because the opportunity in India is pretty vast and we are just one small percentage we are able to cater.
Right. And one question specifically for you, Rajendra, sorry. The models that we have for underwriting, when it becomes, let's say the data is more available, there's a more digital, as you mentioned earlier, sources of data available. Are the models that are already prescribed by existing committees, and the question mentions Nayak and London committee, will become outdated, or there is a need to relook at the existing assessment models?
Yeah, so I think currently the models that we have are based on the traditional approach, and definitely needs to be changed now. We will have more of scorecard based approach that we will have in place. For every product, there will be scorecards, there will be behavior of the customer that will be assessed, and there will be alternate data that will be used today. And we discussed in last 1 hour that the actual income document of the customer may not be available. There will be some surrogate document that will be available. There will be some other data that the customer is using, which will work as a surrogate for me to assess the customer, and that is how it is going to be in future. So I think yes, there is going to be a lot of change, and the overall scenario itself is going to change. I am not going to be dependent only on the brick and mortar model. It is going to be completely a virtual model, and the even the scenario in terms of the processing, whether it is underwriting, the productivity, the efficiency of the staff. And I also relate to the previous question that we were discussing, that the efficiency is going to go up. But at the same time, the market size is going to go up like anything. As I mentioned earlier, 300 million rural customers will get exposed because we'll be using the alternate data. That's a huge market size for any BFSI segment to handle. So that's going to be the future. So I think, yes, the approach is going to change, and it will be based on the alternate data. It is going to be the machine language. It is going to be a scorecard based approach that we'll have.
And I think one extended question on this is, if let's say we are going towards digital and assuming the regulator, as was earlier discussed, is also supporting the move towards digital, are there any legal ramifications, let's say if things go south, right, and one has to really go and enforce the policies in terms of either the prepayments, payments, right, collections, because the entire legal system probably works in still the traditional way. So there, how can an organization think about ring fencing themselves to protect themselves for a scenario where they actually have to take an action and everything is digital, and the, let's say, the legal process still requires digitized, actually physical documentation. Any thoughts on those? Anyone? Sorry, I'm opening it up to all the panelists.
Yeah, I'll take that first. See, typically, like I mentioned to you, the onboarding process of a life insurance policy follows 3 steps, which is typically the KYC, customer consent, and then payment. Now, very clearly, if customer consent comes from a registered mobile phone or from an e-signature, it is very easy to identify that this can't be faked, right? Eventually, if you do a video medical, for example, you can actually see the customer answering those questions, so it can't be faked. Similarly, even on our servicing panels, everything that we do in terms of a service is authenticated by an OTP and sample audited as well, to check with the customer that this is really you who's done it. So in my opinion, the data sanctity and data purity is only going to get better. At the same time, the controls around what is coming in and what is being revealed is also getting better as we speak. So you've already seen in Aadhaar, right? I mean, even if you collect an Aadhaar, you need an Aadhaar vault. That data has to be masked, etc., etc. And now with Aadhaar 2.0 coming into play, they have become even more stringent in terms of the API sharing. So we are in the process of that integration, but we can see that the controls are a lot higher. So in my opinion, I have not seen in the last couple of years that we've been on this digital journey where any customer has disputed the fact that this is somebody has faked me digitally, so far at least. So maybe maybe it also has to do with the fact that our quality of distributor is a lot better and has been transformed. Our segment of customer that we are sourcing from is also far more digitally savvy and therefore more in control of the data that he's providing. But all in all, I think it adds up to the fact that, whether you like it or not, the customer is not going to meet you. Wet signatures are going to go out of fashion, and digital consent is here to stay.
Just wanted to add to it, Vivek. I think the more we are going digital, as you said, there is a need for device dedupe. Okay, because we have come across some situations wherein the customers are applying, multiple times, and there are some fraudulent cases that are trying to enter the system, and this is bound to happen. So, like we have ATMs for so many years now, but still we have ATM scheming and etc. still happening. The only thing is that we need to be careful is that the infosec that we have, that security is very important for your data, the customer's data, and in order to avoid the frauds, for example, the domain verifications. Okay, so we also need to now, so the domain verification maybe is the old method of checking. I would want to check what is the date of the first email that the customer got on that domain. If that domain is only a 2 months old, I can surely say that this is a fraud domain for a public limited company. So on. I mean, there are various other ways of tackling this, and that is how it is going to be in future. We need to be very alert about following these infosec norms.
Sure. So let me also bring in Ajit as well, right? Ajit, you started the session. I think one of the question is very interesting. The question is whether BPaaS and digital is the same, right? What is the difference? Maybe you want to provide some more color. And if you have a point of view on the questions we discuss, anything you want to add, please do that now, please.
Sure. I think there's a valid point that came up, right? When Kaizar talked about the digital and the API enabled ecosystem, and the which in a way what we see is galloping pretty fast, right? And the kind of adoption that is happening on the user end is been very encouraging, and that brings in potentially a lot of builds up a big kind of tendency, so to say, especially when you look at whether it is claims or whether it is pre-underwriting kind of pre-underwriting sanction processes, either in the banking side or on the insurance side. And I think Satish touched upon it. And so possibly one of the queries that I had, and I thought if Rajendra can help take this up, is how does he see BPAS kind of a concept coming and value adding, especially for pre-sanction processes where the kind of the timeline that is taken for a case to get approved is in hours, right? And especially in a digital enabled API enabled ecosystem. A customer is looking at a faster digital experience. So I just wanted to get his thought from a credit head perspective. Rajendra?
Yeah, Ajit, so I think, BPaaS definitely will help the organizations because there are some merits to it. Okay, and I'll just reiterate those merits. I'm sure you are the expert, but I would like to quote it in my terms. Like there is obviously a cost benefit, which is, the main reason of outsourcing the process. Okay, and the other is of the economies of scale, or I'll say even the flexibility in terms of the increasing the capacity, because today the customers ask is a straight through process. Okay, and they are expecting the approvals within few minutes, and because everybody is savvy to the technology, the mobile apps, and they expect that as soon as I apply I should get the loan. Obviously we do have such process wherein the approvals are given in principle, and the disbursements are also happening on the same day, but a long way to cover. There are a lot of organizations which are giving disbursements and claiming that they are giving disbursements within 8 seconds or 10 seconds. But yes, this BPaaS will help us in achieving that too for at least the existing customers. And surely that will be, a great experience for the customer too. Because the BPaaS also helps us in having 24/7 service. Okay, and they have the expertise of hiring the staff, which leaves us, some free time wherein we can focus on the core activities. I think that's the benefit that we get from this.
Sure. Kaizad, Satish, if you would like to add to it, add to these thoughts that Rajendra put across, I'd be grateful.
Yeah, so this is a very good insurance. Typically is a very cyclical business. A large amount of the business actually comes only between the months of December and March, and the first 6 months are typically light, and therefore maintaining an entire organization full of staff doesn't really make sense anymore. So, having a good quality partner who can scale up and down depending on business needs. And, even if you look at just your daily cycle, typically your 9 to 4 is typically your customer time and 4 to 9 is typically your distribution time. So, honestly speaking, we are not in the business of, creating large armies of people to, process. So which is the reason why we brought in the entire technology angle to take away the need for any form of physical processing. But whether we like it or not, there are certain areas in this country, certain segments, certain partners who still prefer some degree of paper processing. And that is where a good quality business process outsourcing partner really helps, because the fact that the partner can bring in expertise, can bring in scale, can bring in flexibility, can bring in variabilization of cost, and most importantly, have deep pockets. Because see, what also happens largely is that there are several times. So, for example, I'll give you a good example of May, where suddenly the entire country went into lockdown 2.0. And we honestly were caught unawares, and the partners that we had outsourced to at that point in time weren't really prepared for the work from home model for more than a short time. So this gave rise to the fact that we had to actually discontinue some partner relationships, because we realized that in the new normal, these guys are not going to be able to support us. So, bringing in expertise, bringing in deep pockets, bringing in the willingness to learn and, give us quality resources is so important, especially in a cyclical business, because honestly speaking, the days are gone where a life insurer would have armies of people sitting in-house and doing stuff. That is over. I mean, whether you like it or not, in a survive, revive, thrive type of environment, people are going to conserve cash, and cash conservation means removing fixed costs which don't add too much value to the organization.
Yeah, Ajit, I think Kazad and RT expressed it very nicely. The only thing I just want to add is that from an operations standpoint, BPAS will definitely add value to customers in terms of managing the volume spike, which is highly unpredictable in this kind of business. It will allow the staff in this organization to focus on the core activities, especially in fluctuating volumes. And this will make them more competitive, because the end-to-end cycle time gets crunched, and that will make them more competitive in the industry.
Sure. That's about it from my side, Vivek.
Thank you, Ajit. So I think we've covered the questions we have. I'm handing it back to Divya, and I think we're just around the right time in terms of plan time.
Yes, very much dot on time.
If there is
Thank you so
anyone from
much.
the audience, if they would want to ask any question, we may have 3-4 minutes. If there's anyone who may want to ask the panelists any questions.
Sure, inviting all those in the audience to kindly let us know in case you have any questions. We've had a fair number of questions here. It's been quite an enthusiastic audience, if I may say so.
Yep.
And though we may not be able to take all of them, I'm anticipating that we receive quite a few more questions here. We can definitely take them offline,
Sure.
and I'm sure they can hear from us. Yeah. Also,
Great.
we're running the poll for the day, and it's on the right-hand side of your screen for those who have not noticed. We'd love to hear from each one of you. And in the light of today's discussion, I urge all our attendees to poll. We await your polls. And yes, it's been quite an amazing discussion today. First, let me thank Mr. Vivek Mathur for summarizing the entire panel discussion and duly helping in answering all the relevant questions that our attendees put forth. Truly valuable takeaways from this session for each one here today. Sincere thanks to all our esteemed panelists and speakers for bringing to life such an interesting discussion. Well, with this, we bring today's virtual conference to a close. Today's session wouldn't have been a success without the active participation of all our esteemed speakers, panelists, and you delegates. I would like to thank each and every one of you for taking the time out and being part of this virtual conference today. A special thank you to Writer Information for their support to this initiative, without whom, of course, this forum wouldn't have been possible. Thank you once again, ladies and gentlemen. Take care and stay safe.
Thank you.
Thank you. Thank you, DNB, and thank you, writers.
Thank you, Ajit, Satish.
Thank you, everyone.
Thanks, Divya.
Thank you, Divya, an amazing host.
Pleasure, sir. Thanks so much for your kind words.